Well, good afternoon, everyone. Scott Henderson, shooter. And hey, we are going to go over some charts, see if we can find some opportunities in this, I don't know what we want to call it, chop or messy market. Of course, at the end of our presentation, please do review our disclosure. Let's jump right into it. Okay, we're starting off with the S&P. The key thing that I think I want to point out today is because we're trying to pump, and we keep rejecting anytime we push price, and we keep rejecting every time we try and flush price. So it makes it a very challenging market. I've been able to pull out a couple points scalping early in the morning right around the opening range, but the reality is the rest of the day you're just basically getting run over. And that, I don't think it's going to change here yet until we get this flush. Now, what we see on the chart, you'll note that I have a speed line drafted down here. I think that's our confluence spot, maybe down to about 630, 635 in that range. However, I don't know that we get it here. This, even though I had noted an ideal stop run up here, we were shallow. So this to me feels incomplete, and honestly, this feels incomplete. So the question is, are we going to flush first, or are we going to put in that stop and then we reject and then flush? That's sort of the thought right there. I think this broadening formation is where we may be, well through March, maybe even mid-April at this point. However, if we step out in time, just the bigger picture, it really is not changed visually the way that I see this. Either we're going to have a sort of rolling, meandering flat that we build out here, and it could be tighter. I'm just with equality, if this is our shallowest correction, wave 2, and we don't get a deeper one, then wave 4 should be our deepest retrace, which means it'll be a ending diagonal. And then we got a decent rejection, which will probably come back and test the shelf. That's just a bigger picture there. Let's jump to the NASDAQ. Much more constructive look. I've pretty much, I usually will scalp the S&P 500 in the mornings, just coming out of the Asia if I'm up that early. And I'm pretty much stuck to the NASDAQ and the Russell because there's been more of a range. And the range being is that between pre-market and the opening range, usually you've got a good, 50 to $100 there in spread between ask and bid at any given point, depending on what time frame you're looking at. So I think we get a good bounce off of this buy-side imbalance right here around 589. Then we're going to go back and test these highs. So that really is what I'm stocking this morning. I just about pulled the trigger until I saw the VIX VXX was at 28 a share when I looked at that, because I was going to drop some 605 calls. And back checking different tells in the market, it keeps you out of a trade when you like it for whatever reason, and sometimes it'll keep you in a trade when you like it for some reason. And this morning, so we didn't pull that trigger on that, and it turned out to be the right call, because basically we faded ever since the open. So the thought here is that we probably are in this flat here, so we're in this tight range, and we could be here a while. This is typically, we've already extended our last flat sort of range that we had here. So this could become a full WXYZ, not just an ABC pattern. But the larger picture on this, I still think this uptrend is intact. I don't think it's necessarily, from our low here, unless we take out this ledge, where I'm wrong at roughly about 569, then, obviously I think we come back and retest this. But impulse wise, I see this thing. We got a potential back to $800 or $900 here, depending on, what slope changes. But at this point, nothing's changed. We're just beating out this uptrend. This was the only correction that broke trend support. We're now back in trend support if you actually look at it. So I see no reason why that should change. Let's look at the Russells here for a minute. Very euphoric, pushing. I think the 78.6 is totally viable from here to 78.76. I just don't like the options on that one. It's pretty liquid, but I'm not, or my experience has been, it's not as profitable as trading the SPY or the NASDAQ when it's flowing in the right direction. So it's more of a tell. And the one thing I did miss yesterday were the banks, because the banks just absolutely started to run, or actually Tuesday, as soon as we opened. And I hesitated, didn't put them on, didn't call them out, but Morgan Stanley, Goldman Sachs all ran at the same time. So obviously XLF ran as well. And I don't think that's done. Just pulling over to XLF for a second, and then we will come back to the Russell. But, we are not bullish we just have a huge range on this candle if we come down to the daily. I mean, we ran just a little bit, rejected first of the week. So, I don't know that not taking that trade was right or wrong. It just wouldn't have been profitable unless you caught it right at the opening before they ran. So, looking at the Russells on a tighter basis, I think we head back up here and take out this high. That's just my thought. I think this is wave one that we have here as far as our look. So, looking at this from, hey, that's wave one. Wave two is done. So we should get a wave three that should be extended. So we're going to continue to push, roughly into the 275 range as far as distance. Now, jumping over the Dow, I think there's actually a chance trend support breaks here. If we just look from our markers where we've held that, we've basically been hugging this since, really before that, but this last leg was September of 25. We've overshot it 2 times, but we got right back in there and it's held consistently. So I would think we get another 2 pushes below it like this up here. Reason being is peaking drive 1, peaking drive 2, peaking drive 3, typically, so we should broaden a little bit. So I think we get a pullback maybe to about 480 here. All right, let's look at metals a little bit. The SLV, I think we get a pop back up here. I'm hesitant because volume's shallow. Notice how slight this volume is down here. I really want it to break back above the body of this candle here, this roughly $72 for me to jump back on board. And put something on as far as silver. Then I think we head and build to the gap. But I don't want to be early on it. I don't want to sit here and chop with the market getting soft. And right now, we really don't have that flight of safety continuing, which is what I would like to see. I would like to see gold get a bid again. I would like to see TLT get a bid again. Bitcoin, I do think we are still in trouble. We are not done to the downside. It's going to be whether or not we get a bounce here, and that's an equal ABC still not off the table, which would be something more like we would get equality pretty much is not done, and we end up getting our 3 down here a little bit lower on the leg, and then we have 1 continuation lower. So I get real interested at 24K. I might test it at 41, but it's going to be very limited because this is a risk-off environment related to liquidity. So that's something we kind of want to avoid unless we really are aggressively going after the short side. And of course, as you know, we don't really do that as much in this room or when we were at Fundamental Trends. However, that's something I'm probably going to change here as we progressively head more towards a bear market. But I want confirmation before I start really pushing the short. All right, looking at Ethereum, I think our number is down here. Or I like it better, around 1560, roughly in that range. Now, I wanted to show IBIT as well, just for a visual here. We've got this buy-side imbalance that sits right here that is an optimum spot. We should see buyers show up here, which we have just a little bit off that wick, but it's fading. So I would think we get back to this spot. Then we really see whether or not Bitcoin's going to get any kind of bounce. Obviously IBIT is relative to that, but structurally that's the place. And I think a lot more buyers show up if we get that flush down to 47, which would be equal to the 25 in IBIT. Now, I wanted to look at semis because I think we got a broadening here. I think we get a expanded wave 4, even though wave 2 at this point is our broadest correction here at this point. If we come in here and we measure this wick off of this low, help if I could get it to pull. So if that's our low, I think we get a very shallow top here. So I think this will be the tell on whether the market's going to roll over. Notice where I have my sell side, buy side imbalances highlighted. So we're in that band now for rejection. I'm just looking for a confirmation that we get some kind of sell here. Now, taking a look at XLE, we have a lot of upside with this Iranian news. We could literally push $64 here, and we've not slowed down. This is accelerating. So, maybe we push up. We could push right up to this resistance on our 3. That wouldn't be too long. Could be the case. Obviously, if you're holding any XLE, of course, hold. And then I wanted to look at utilities. Now, notice we did get that bid, and my projection is that we retrace and we pull it back because the assumption is that we get a little bit of a rally here. Because, when continuation fades, or history has taught us when momentum changes, you get this flat consolidation zone. And that's really what we're in as far as the indices at this point. So we want to make sure we are mindful of that, because those, as I call the MO, every stock, every sector, every metals, all has a modus operandi where it's, hey, this is what it's done. This is what it's most likely to do. These are the standard deviations within that range, ultimately that might be there. And this is a good spot for me to just pop in and bring in our Bollinger Bands, because note, we're sort of testing. We're above the second standard deviation, and we're getting a sell candle here. And sell volume came in pretty aggressive off of that. That was our number that came in here. We'll, of course, print that on this new high, but I would assume it would be a similar number. So I would think that we could get a pullback very much like this, which would be a tailwind for the industry. All right, let's take a look at some of our names. Let's just go through. We're still limited on what we have open. Deere is just rolling way too. Look at how broad these Bollinger Bands are here. I'm going to keep them on the tape here just for the rest of today's session, just so you guys get the visual here. We are over the third standard deviation. This thing is just flying, right? And the measuring this coming out to the monthly is extremely challenging, just because of how euphoric this has been. And, frankly, we just nailed this with all of the underlying factors towards the upside here. So I think that 2168 is absolutely totally viable. So I'm thinking we could go $300. So now AST Space Mobile is kind of getting interested. Got to come back down to the daily here to see this. It's in my first aggressive buy zone that I flagged for AI infrastructure and space as a service, which, by the way, I think space is, Musk has been chattering a lot about solar and space. And that would be, and China has that, I don't know, that test where they're actually generating power in space and sending it down and using it. And they functionally, so that they've proven that process actually works. So I think that's the next frontier for SpaceX. Because he's got the advantage with putting the satellites up there and everything else for wireless access, space as a service. So, I think ASTS is a major benefactor there. So, when I look at this, I like to come out and look at the longer picture here. I would love a test of this band right here at 71, and then I'll probably put something back on long. But let me come out to the monthly. I just think we're destined for 157 on, as far as the extension. Right now, I'm showing my 5 for about 145. It's just way too euphoric a tape. I see no reason that it doesn't break down. All right, let's look at AMTX. Maybe I have to go to the week. So we're but as long as we hold this 136, still nothing wrong. It's just consolidating, trying to decide which way it's going to go. I think the catalyst for this, I think we need an executive order in addition to what's there, where we start funding the biofuels a little more aggressive. And part of the reason for that is the only thing right now that's on the table to meet the supply demand of electricity for AI data centers is natural gas. And there are limited regions for that. So all the other alternative, there's some chatter about solar, that it could become a leading frontier. However, we all know that Trump doesn't favor solar or wind. So I don't think he's going to get behind that and back. I could be wrong. I don't know how much desperation comes from these corporations that have planned these billions of dollars in capex for these data centers, and they don't have power to run them. I don't know how much they're going to be able to motivate him at that point. But plan hasn't changed. I haven't added, just sitting there waiting for this thing to do something. I wanted to look at AVA. Now, I threw this on mostly because of the war chatter that we were seeing. The ship builds up and aircraft, thousands of aircraft have now headed to Europe. It looks like they are going to go after Iran, or at least that's my assumption at this point. It might all be noise to bring them back to how many times have they brought them back to the negotiating table? But in this scenario, 1618 is a nice $15 here from $8. So it's got some decent upside. So just trying to scale and stay on the right side of the market. All right, look at Planet Labs. We added that this morning back on board. I think our base is in. Basically, I was looking at the wick off of this, and it had a nice push pre-market. I was like, okay, I'm on board. I'll take the chance with that one. We're looking for about 46 back to the upside. All right, SMCI was flagged as a request today. I like it. I just don't like how it's acting right here. We've got this little pop-up, gap up. Let's see what this gap does, and then I'll decide whether I want to enter back into this. But if I come down, I'm going to come down to a 4-hour on this one. It really is very noisy. That's like a failure gap to me. In other words, it was a bullish attempt. We rejected right here at this resistance. I mean, it just wicked off. So it was a block or split buyer, and then they might have actually pulled those orders just by the way that candle. So I would like to see that gap either filled or 50% of it, and then I would consider. But broadening in the Bollinger Bands implies that it's going to roll back over to some degree. Broadening, rolling over. So, it's not this kind of squeeze like you get here on a breakout type of thing. It's just like we got the squeeze here, pulled back, got the final overshoot, which was a divergent lower low in price and a higher low in RSI. We got a clearing on RSI structure. So, when you compare the tools, it gives you, or at least gives me, a clear visual on where we might be going. All right, let's look at Lunar. I want to come back after the weekly on this one. I'd like a better base here, even though, we clearly had this push. We rejected this shelf here. We had this wick here. It's taken that out. So we have to hold right here. Otherwise, this is going to go back and test the lows. I mean, that is really invalidation for me to the downside or to the upside, simply because we've got this huge shelf here. And next level is going to be a little bit below there. Just so I give you a visual, it's going to be about right here at about 1330. So I like it better at 1330. So if that holds, that would be my optimal spot. Otherwise, I'm going to go ahead and sell that, say I would like it here off of this sell side, down just a tad bit lower than that, roughly between 950 and 11. But I do like the look here. I like the rejection. The only thing is this looks too much like an ABC, and there are other setups that I'm stocking, but I also want, the market keeps telling me we're not done to the downside. That's what I keep getting. So in equality, I mean, we could get $5 on this with extreme market weakness. So that would be my hesitation. ONDS actually looks really good. Kind of ticked I didn't put it back on. I think it heads up towards this 3 at $19. I'm just seeing if it rejects here, gives me any kind of better back test this shelf, maybe for an enter versus chasing. To be very candid, as soon as the market turns bullish, I'll chase it. But until I see all of the Mag 7 red in this situation, I'm not going to chase it because it had so much volatility off of this high and so much volatility off of this. I want to make sure that's done because it still could be an ending diagonal. That's the challenging part. There's a lot of looks like ending diagonal, like they're not done. So we've got this boom. So our 4 could be there. Our 5 could push us way back down to about $6. I don't want to be caught on the wrong side of that. I've invested a lot of time and effort in staying whole, really from October of 22. And so far the plan has worked. So when I have a tell that says, hey, maybe we're not done this wick, I'd like to see the back test and see where it holds. And then I'll think about whether I'm going to re-enter it then. All right. EZPW, hopefully I've gotten that name right. Looks to me like we get an ABC corrective leg here. And the reason I'm saying that is this is very euphoric for this tape. I mean, where do we have that kind of bullish candle? I mean, just one candle, boom. Just took out. I mean, we have roughly a $4 range, a 20% range in a week. I mean, obviously that can be an event, but then we had this pullback. The body didn't hold. So it's not functioning like there's going to be 3 generals here. Could still get a general, but most of the time you get this gap and then it breaks down, you back test. So, the thought would be that we maybe get a pull, maybe to around the 618 at $22. That might be worth adding if you don't have it. Otherwise, just use confirming trend support, as your anchor. Just run right here, 50% of that candle. It takes that out. I would let 50% get taken out, right here at roughly 23.37. So I'm going to come in here and flip a price tag up there for you, roughly there, and you can use the base anchor at roughly 770. That's how I would manage that position. All right, Riley's done nothing wrong, really tested the gap just a little bit. We take out this shelf though, then I get a little concerned. So we get a weekly close below this. What is that? 640. Which we're almost right there. Then I would trim probably half and see what happens because you're probably going to get a shot to buy it back. I don't think it takes this out this low. I mean, I don't, very unlikely. I mean, that's pretty clean price rejection, but look where we are as far as the MACD cross. This is telling us, this is mound one. It's telling us clean. We're going to get a mound two, and we're going to get mound three. So, if you look at the wave structure coming off of that, I don't think it's done anything. The challenging part is there's so much noise in this market that we don't want to get shaken out on names that are going to run, but this is probably going to run right up to that wave one at $21 is to the upside. So we want to try and figure out how to keep a position on in something like Riley here at this point. PAR on the weekly. It looks like it's going to reject. I think this is an ABC. Just looking at it pretty quick. So we'll get something like this. I mean, could just come in here and put it in a flat too, and that could hold. And that's really not an elongated, but this is like a ending diagonal in the look from our base. So this is our 1, this is our 2, this is our 3, this is our 4. So 5 can be shallow. The thing about ending diagonals, they don't necessarily have to take out 3. Quite often they overshoot it, and sometimes it's by a frickin' penny. Right? Sometimes in this market, though, with the euphoria we've had, wave 5 turns out to be the longest wave. So, as far as Elliott wave theory is concerned, ending diagonals sort of break the rules a little bit, at least with my experience with them. But the one thing that we are doing is we are kind of squeezing. So wherever we get a back test to, it's a launching pad. I like them as far as for setups long. So I'd be cautious. I'm wrong if we close above that wick at 44.07. I was noticed this looks really good actually. I was looking at it. Nice squeeze. Look at those Bollinger Bands coming into that. This thing is a launching pad. We are going to take out these highs at 495. I wish the options were more liquid. All right, let's look at Reddit. Nice spot for a shot. Great 50% back candidate to 229. I'm wrong if it breaks below 127.80. It does not confirm until about 185.11. That's my 2 cents, and I'm sticking to it. Actually, I was noticing it yesterday a little bit. And how perfect was that XABC pattern that I mapped out? Overshot it a little bit. Almost made me look like a fool here, but we still got it. I can't tell how many times I've mapped something out on a chart, and Elliott wave is not really time restricted. There are other tools that can give us some time and really Bollinger Bands with fibs. But I'd like to note another thing too. Notice that we've crossed we're basically skirting the third standard deviation. So this is Flushing Drive 1, Flushing Drive 2. We could get a third, but this also could be an XABC pattern in the other direction, which is really high and tight. That means it could be a heck of a bounce. So let me go and find my tool here. So if we're coming in, and let's just say this is our 1, 2, 3. So this will be something like this, if that actually is, push us back to about 172. They tend to be distorted just a little bit, but that's kind of the look for me. I like the way now looks right here. If it was a green candle, when I looked at it yesterday, I would have mapped it for 50% back. I only went to 50% back candles that were green or setups if I had a green candle on either the daily or the weekly when I was looking at it, solely because of the conditions in the market. On top of that, also, I'm not sure if you guys noticed, my invalidations were not at the base of the pattern. I was tightening them up. So I was looking for a reason to say, okay, I really don't want to say, hey, we're going to invalidate here, right? When I'm looking at the prior shelf and I'm like, okay, that's a better spot. If I'm going to chase something long and what my perception is as a weak market, I came in and I started moving up the invalidation lines, because if it's going to work, I want a piece on, it's going to run. If it's not going to work and it's going to stall out like so many names are, I want to get the hell out. And that's really what I did in mapping out the charts over this weekend, or this week actually, as I was posting more stuff. I waited till Optex before I posted the charts that I liked. So I don't think gold's going to give it up here. It could back to about 402, but I really don't have a lot of conviction in that with the breadth here. I mean, it's pinning 5,000 and it's holding. And I think the catalyst is that you have BOJ and China that are moving moving capital to hard assets. China basically has boycotted the US dollar. I mean, we have the lowest participation in treasuries than we've ever seen, right? I don't think gold slows down. I think we catch another bid. Now, I'm wrong if it takes out this 421, and even on this body, it takes out this 444.36. Yeah, maybe. But I think there's better shorts, because when I look at this and I look at this leg that we're in, so this is Obviously, this was our mound 1. This is our mound 2. So this potentially could be mound 3. But realize the wick came off and we took back a little bit. So if we come up and look at the fibs off of that, we came back and we went to 23.6. We didn't get to the 3.82. What that tells me on that flush is this is still a very euphoric take. It's not dead and it's not dying. It's shallow retrace, shallow retrace, shallow retrace, right? This is just broader because it's on 5, but we could come in and just put, a flat type ABC structure here and then keep going. So from a Elliott wave standpoint, maybe we got something like this and it's done. I mean, it could come back and put it in here, but I think this ledge holds. I think regardless, that's just unless the dynamics change with China. That's my 2 cents. All right, looking at ROK, nice bid here. When yesterday I went through all the industrial or the war stocks just because of what seems to be building in Iran. So good spot to take it long. Peaking drive 1, peaking drive 2, we're there. We should get a 3 up here. Decent risk reward. Let me come down to the 4 hour. I looked at this, but I decided on AVA versus everything else. And mainly it was because of these candles right here. Hitting on resistance here. It gets back down here. I get real interested around 388 for a shot back up. But right now it's not getting a bid. The flow in options was not really that aggressive. On top of this looks like a corrective leg A, right? So then we're going to get a C, which this may be our B. And then we're going to get a C. So if we get an impulse down, it would look something like this, which is what it kind of looks like as far as I'm concerned. So this looks like, hey, we just put in our 4, right? And our 5 is going to get pulled down, maybe here, or maybe even back down to the shelf at 358. So I'm neutral because of the tailwind from possible Iran war. But at the same time, the technicals are telling me, no, get on the sideline, wait. That's sort of my look. So any other stocks we want to look at? Well, we got through that pretty quick. 36 minutes. I'm getting better at this. All right. I'm going to say going once, going twice. Hopefully I covered everything you guys wanted me to. Until next time, I appreciate you guys, gals. Kudos, Janet. That was a good pick, by the way. Good job.